Hello and welcome to another episode of the Minor Issues Podcast. I'm Mark Thornton at the Mises Institute. The Jeddah Tower is a skyscraper construction project in Jeddah in central west Saudi Arabia on the coast of the Red Sea. Jeddah is a large port city and is the gateway to Islamic holy sites. The tower was planned to be the first kilometer-tall building, 3,281 feet, and would become the world's tallest building. The Skyscraper Curse is that unseemly, unlikely coincidence between the building of the world's tallest skyscraper and the onset of a global economic crisis. The history of skyscrapers going back 150 years shows an uncanny relationship or correlation, and that correlation is sustained by economic theory in the form of the Austrian business cycle theory, ABCT. You can read all about the history of the skyscraper and the theoretical connection between this correlation in my book, The Skyscraper Curse, and how Austrian economists predicted every major economic crisis of the last century. There is a link provided so that you can download the book for free, but you can also purchase the book and have it delivered to you. Conceived in 2009, and begun in 2012, above-ground level construction of the Jeddah Tower did not begin until 2014. Construction on the project was halted in 2018 during the Saudi Arabia political purge, when the principals of this project, its ownership, and the construction company were arrested. At the halt of construction, the building was projected to set a new skyscraper record in 2020. In retrospect, we know that such a record was not set and that we had a very different type of global crisis in 2020, the COVID intervention. A year ago, we learned that this project would be resurrected, and construction was finally resumed earlier this year. The new construction has already doubled the number of above-ground floors on its way to the record height. It is scheduled for completion in 2028, although the topping off of the building should occur in 2027, and the record-setting height could be reached even earlier. If all this comes to pass, the Skyscraper Curse could not only be resurrected, but also vindicated in a very bizarre way. It would mean that a global economic crisis would be readily apparent to everybody in 2027 or so, just as the Skyscraper Curse and the global financial crisis were readily apparent to all by 2010. Now, if you are unfamiliar with the Skyscraper Curse and would like to find out more, then you should find this next interview very interesting and informative. This recently rediscovered interview was conducted by economist Gene Tunny in 2021 on the podcast Economics Explored, and he asked all the smart questions.
Professor Mark Thornton, Senior Fellow at the Mises Institute. Thanks for joining me on the program.
Gene, it's great to be with you here today.
Excellent, Mark. Now, you've received some renown for your work on what is called the Skyscraper Index. Would you be able to explain exactly what that is, please?
Well, it's easy to explain. It's the eerie correlation between the building of a world record-setting skyscraper and an economic collapse, usually on a worldwide basis. So you have juxtaposed, the greatest of the great economic times and human accomplishment on the one hand, and then shortly thereafter, you enter usually a world economic crisis. So it's a great indicator, and it leads to what is called the skyscraper curse.
Ah, right. Okay. So, what are some examples of this having occurred, Mark? Are there some famous examples of this or infamous?
Sure. These things come in waves. And so in the 1920s, Americans on the island of Manhattan in New York were busy building 40 Wall Street, which set a world record, the Chrysler Building, which set a world record in 1930, I believe, and then the Empire State Building, which was opened in 1931, setting yet another world record. And of course, as they were building these mighty skyscrapers all around New York, things were the best that they'd ever been in human history, particularly for those people who lived in New York and were benefiting from Wall Street. And then, of course, we entered the Great Depression. The same thing happened in the late 1960s, which in the United States and most other places around the world were great economic times. It was the longest continuous economic expansion in US history to that point. And we built World Trade Towers 1 and 2, setting new records for the first time in 40 years. And then the Sears Tower, which has subsequently been renamed, but it set a record at almost the same height and opened in the early 1970s. And then the United States entered one of its most prolonged economic slumps. It's called the stagflation of the 1970s, but it actually ended in what I would call an economic depression in the United States from 1979 to 1982, when the United States had over 10% unemployment and more than basic interest rates of higher than 10%. Government bonds were selling for something like 18% interest rate returns. And of course, when the United States has trouble, that gets reverberated around the world to our trading partners and our financial partners. And because it's such a large consumer market, these negative consequences, which start in the United States, negatively affect people around the world. They certainly affect stock markets around the world. They affect, in both of those cases, of course, commodity prices in the 1930s, and the inflation adjusted situation in the United States was such that it was a calamity for commodity producers around the world. So this is a very strange, unique indicator about the economy. And I first caught wind of it from a real estate analyst working in Hong Kong named Andrew Lawrence. I guess that was in 1999 when I came across this whole idea of the skyscraper index that he put together in the skyscraper curse. We were about to experience another curse here in our technology industry. And what I saw, everybody else kind of laughed it off in the business press. And back then we still had magazines. So all of the magazines made fun of this whole idea. They all wrote about it because it's interesting and entertaining. But what I saw was something deadly serious, that this indicator embodied the Austrian business cycle theory, or the business cycle theory of the Austrian school and the Austrian economist, dating all the way back to Ludwig von Mises. And of course, that's still a very big topic today within Austrian economic circles, but also, of course, economists and finance experts are talking about the business cycle. Where are we? When is the next shoe going to drop? Where did all this inflation come from? Why is real estate and land prices at record levels in important pockets of real estate all around the world? Why
Mm,
is all this happening, and how to make sense of it?
absolutely. So, can I ask about the late 90s? Were you looking at there were those towers in Malaysia, were there? The Petronas Towers, is that right? And was that did they predict the Asian financial crisis? Was that one of the examples you were looking at?
Yes, I mean that's when the the important core of the financial economy had moved to Asia, along with Japan in the 1980s, Taiwan with its semiconductor industry, Hong Kong with the financial industry that was financing all of this, the Asian tigers that seemed to do so well when Japan had started to fall. And so they became the focus of the economy. And the
Mm,
Petronas Towers, I believe it opened in 1997. It set another record
yeah.
in terms of livable space inside of a skyscraper and height. And that marked really the beginning of the troubles in those Asian economies. And of course, that spread and dampened um, the worldwide economy. And then later on, as the boom in Asia um, moved from the Asian tigers specifically back to Taiwan and a couple of other countries and the United States, we had Taipei 101 in Taiwan setting yet another record. So that was where the hot story was in the economy. And that building actually opened after the economic and stock market collapse had taken place. So you had sort of bookends. um, Petronas Towers comes near the beginning of the troubles and really during the peak of the Asian tigers. And then Taipei 101 opens, although it had set the record earlier, it only had opened after everybody knew about these problems. So there's nothing exact or specific. It's very difficult to match up these records and what does a record setting skyscraper actually mean. And these events, these crucial events of economic history, but there were certainly two record setting skyscrapers associated with that whole tech um, stock bubble and bust.
Yeah. And what about in the lead up to the 2008 financial crisis? Were there any notable tallest buildings that were associated with that?
That's maybe one of the best examples of because of the timing and also because I was around to actually make a forecast
Yeah.
concerning all of this. So in Dubai, one of the United Arab Emirates in the Middle East, they embarked on building a record setting skyscraper in the early 2000s. It actually set the record, we think, in late 2006 or 2007, and then setting a new world record height. And then, of course, right after that, in 2007, we saw the financial meltdown and the economic meltdown, the breakdown of the housing bubble in the United States and some of the other housing bubbles break. And then in 2010, the Dubai Tower actually opened. And before it opened, the country and the ruler of Dubai actually went bankrupt and had to be bailed out. The bailout is estimated to be somewhere between $5 and $10 billion, which is a great deal of money for a very, very small country. And it opened, but the whole Dubai was completely buried economically speaking. And I've been told it was, in a relative sense, it was like a ghost town. And that was the time, you might remember, when people would drive Mercedes Benz and very expensive luxury cars to the airport that they had leased and just left the car there at the airport parking and taken off to go back to Europe or to go back to Asia. They were getting out while the getting was good, and they left their leased vehicles there for whoever wanted them.
Right.
That's what happened by the time that tower actually officially opened for business in January of 2010. So really, 2009, everybody was moving in. And a few reporters actually did enough research to find out that I had talked about this bubble and bust and the skyscraper index and curse back in 2007.
Yeah. Yeah. No, it's a fascinating index. That when Darren, our mutual acquaintance, Darren Brady Nelson, he mentioned you'd be good to have on the program to speak about it, and I thought, oh, that's a really clever idea, and it reminded me of something that occurred here I'm in the state of Queensland in Australia, and in the 1980s in Australia we had a huge boom in property and in property development. And our premier at the time here in Queensland had the idea we'd build the world's tallest building here in Brisbane. And so there was all this exuberance. And well, he was trying to open us. Well, we were exporting a lot to Japan and to, I think, Taiwan and Korea, lots of coal and other minerals. And so the idea was we were the booming state, and we build the world's tallest building. And it's just a complete folly when you think about it. There is some sort of basis for it, isn't there? I mean, there's this over exuberance. Now, you're probably better to explain this than I am, because you can explain it in terms of economics, and there's this Austrian economics view about it. So could you explain what the underlying economics are, please, Mark? I mean, noting that obviously it's not actually the building of the skyscraper itself that causes the crisis. It's an indicator. It's correlation rather than causation. Would you be able to explain the underlying economics, please?
Yeah, I'd be happy to. And you're absolutely right. And what I saw was a connection between this indicator and Austrian business cycle theory. And Austrian business cycle theory begins a cycle with an artificially low interest rate, which induces a boom in the economy. But what type of boom? And well, specifically, of course, interest rates are great for real estate because lower interest rates sort of automatically translates into higher asset prices. And homes and businesses and skyscrapers and warehouses, that's all real estate. So real estate benefits directly from lower interest rates. And also, more specifically, lower interest rates have a positive effect on land prices. So when interest rates are low or artificially low, induced by a central bank like the Federal Reserve, this tends to put upward pressure on land prices. And specifically, it puts up very high upward pressure on land prices in the central business district. Okay, so that's where the interest rate effect on land prices is most heavily felt. And so, with urban land prices rising, as any construction person or real estate person or banker will tell you, if you have a high land price, you have to put more square feet on that piece of property in order to pay for that higher price of land. So as land prices go up because of the lower interest rates, you have to put more square footage. And of course, the easiest way, and it's not easy, it's expensive, is to add floors to the construction plan. So as you go from one floor, you might have 1,000 square feet. As you go to the second floor, you might have 1,900. And the third floor, you get 2,800. That sort of thing. So it induces people to build higher. It also increases mergers and acquisitions. And this is a little difficult to follow, but mergers and acquisitions, when small companies are bought up and conglomerated into very large companies, they need office space in central business districts. So if we took all the small dairy farmers around Auburn, Alabama, who are single family farms, and we bought them all up and merged them into one business, well, it would be a bigger business, and it would need headquarters, and it would need an HR department, and it would have a staff that takes care of all of the production and labor and so forth. And so they need an office space. And so lower interest rates, higher land prices, you need more office space in central business districts. And that induces, again, people to build taller. So all of these incentives that we're talking about with world record-setting skyscrapers, they all emanate up through the economy on the back of artificially low interest rates by the Federal Reserve or whatever central bank we're talking about.
Okay. This would be a good place to talk about this Austrian view of the business cycle. So you're talking about artificially low interest rates. What exactly do you mean there? Are you suggesting that the central bank it's keeping interest rates too low relative to what they should be to ensure a more stable economy? What exactly are you what's the Austrian school view there, please, Mark? If you could explain that, please.
Well, it plays a central role in our macroeconomic analysis. Artificially low interest rates means that the central bank has to be pumping money into the economy in order to keep them artificially low. So they're buying up government bonds, or in the last several years, they've been buying mortgages and other assets as well in Japan and the United States and probably elsewhere. And so that frees up money in the banks to make more loans, and also at lower interest rates. And the impact of those lower interest rates are not uniform. The people who make long-term investments, which normally we love, those people are helped more by those artificially low interest rates than people who are borrowing the money for current business activities that they're going to pay back in the short run. So think of pharmaceutical research, for example. If the interest rate is 1%, and those pharmaceutical companies have to pay researchers $100,000 or $80,000 a year for 20 years before those prescription drugs ever come onto the market, then you can do the net present value calculations. That's going to help that type of investment tremendously.
Yeah.
Compared to my department stores borrowing for inventory and accounts receivable and things of that nature. So it's a big bonus. It's a big advantage for long-term investors who can take advantage of the power of compound interest. And so, one of the biggest long-term investments you can make is in a physical structure, a physical real estate structure. All of those, skyscrapers that I mentioned, with the exception of the World Trade Towers, they're still standing, and there's been no talk of somehow dismantling them, even though some of them are almost 100 years old. So those are very long-term investments, and they are stimulated by these artificially low interest rates.
Right. Yes. And it was interesting. It's interesting how some of these they end up opening during the crash, don't they, or after the crash and during the subsequent recession or downturn. And certainly, you mentioned the Empire State Building opened during the Depression, and so it must have remained mostly empty or largely empty for many of its early years. It's just extraordinary.
Yeah, and it's hard for real estate people. We have some record-setting buildings being built right around me right now, and they know that they're 4 stories underground parking, and their ground level retail space,
Yeah.
and the apartments above. The apartments above are instantaneously full. The retail level is not instantaneously full. They know that they build into their plans that it may take a year, maybe 2 years to get to full capacity. So, the Empire State Building, the people who owned that and were running that, they had no idea that that building was going to be under occupied for, well, until the United States went into World War II. That building was under occupied. I think it averaged less than 50% occupancy from 1931 to 1941. So that was a complete loser. And as a matter of fact, in New York City, they referred to the Empire State Building, which New York State is the Empire State. They referred to it in New York City as the Empty State Building because it had so few tenants and not a lot of economic activity with the tenants that they had. And of course, in order to induce tenants into the building, they had to cannibalize tenants from other buildings by offering discounts. So a lot of the other buildings around them suffered some because the Empire State Building was just leasing the space to anybody who would take it. So it was a disaster.
Yeah. Okay. And yeah, I mean, I can certainly see how you're having those low interest rates and can lead to that sort of instability, and then you have this what's the word, overhang, or you have all of this stock that has to get absorbed before there's going to be more construction. So yeah, you end up with this boom bust cycle, and I think there's I've increasingly become sympathetic toward the Austrian view on these things. I have to do more reading into it. I used to work in the Treasury in Australia, so I tend to have a more sort of mainstream view of macro. I've started to see that if the central bank is just focusing on something like a Taylor rule and it's just focusing on the CPI and the GDP gap, then the central bank could be ignoring the build-up of instability in the economy. So, I think there's...
That's absolutely right. I mean, the Austrian theory has an explanation for the facts. And other theories of the business cycle also explain the facts. But the Austrian theory is microeconomic. And you'll recognize that we talk about mergers and acquisition and land prices and real estate construction. This is all microeconomics.
So when I say it's macroeconomics in the Austrian school, it's really just all microeconomics. And that's what I show in my book on the Skyscraper Curse, is that it's all everything that mainstream economists accept when you deal with these issues one by one. And there's mainstream evidence to all these points in my book on the Skyscraper Curse. It's just that the economic explanation that the Austrians provide just simply isn't accepted. Keynesians think that everything is more psychological, and most of our fellow economists at the Fed and some of the universities, they think business cycles are the result of real shocks in the economy. And the Austrians integrate the real shocks and the psychology within this microeconomic framework. So we don't disagree that there are real shocks, and we don't disagree that there are psychological factors. It's just that we show through microeconomics and the time value of money and things of that nature that the shocks and the psychology changes and shifts are brought about not exogenously, but very much endogenously.
Right. Okay. Yes. Yes. Can I ask about the theories of? There's a classical economist I've seen referenced in regard to the Skyscraper Index, Cantillon or Cantillon. Would you be able to
Yes.
explain why he is referenced in this context, please?
Well, he's someone I've done a lot of research on. I've written a new translation of his one book, an essay on the nature of commerce in general. And it's really surprising when you read the economists before him and after him, only a few people were actually influenced because he was killed before the book was ever published. And he's subsequently been rediscovered. And basically, he lays out for the first time economics. And he is the quote teacher of Adam Smith and David Hume and Jean-Baptiste Say and Turgot and all of these people, the physiocrats. But in it, he talks about interest rates and the money supply and exchange rates in such a way that he shows something that's very difficult to see, even in government statistics. It's hard to see the fact that injecting new money into the economy can have distribution effects. And so that's been labeled in the modern literature Cantillon effects. So
Okay.
that now he talked about it as new gold supplies, but it's not too much of a stretch to say, well, the money's coming as a result of central bank policy rather than new gold discoveries. But he shows that this has real effects, that it leads entrepreneurs to make investments that later go bust, and causes a general slump. So we take our cue from Richard Cantillon, the Irish French economist of the early 18th century, because he explained really for the first time the impact of increasing the money supply, what determined interest rates, what determined foreign exchange ratios, all of that for the first time. And he talked about how central banks, in his day, they were called national banks, such as the Bank of London, the Bank of England, how they can cause booms in asset prices that are inevitably followed by economic crisis.
Yeah.
And so we really take his lead with respect to that. It all really begins by seeing how injecting money, which is hard to see, as I mentioned, and is assumed away by most economists, how that really gets the ball rolling.
Yeah, it certainly gets the ball rolling. I mean, we're speaking on I think it's the 10th of December in the US, where you are. It's the 11th in Australia. But you've just had a very high inflation reading over there, haven't you, in the States? I saw that this morning.
That usually comes out after the effect
Yes,
of the
yes.
new money. The new consumer good prices only come later. The first impact is typically on asset prices.
Yes,
That's
yes.
what gets the ball rolling, and then it's only much later that the price increases show up, not so much in asset prices and commodity prices and land prices, but in consumer goods prices, and that's what we're seeing today. I think
Yeah.
the consumer price index in the U.S. today came out, and I think it's been like 35 years. It's the highest level in 35 years.
Yeah, around that. So Financial Times is reporting US inflation hits fastest annual pace since 1982. So consumer price index rises 6.8% in November, intensifying pressure on the White House as it seeks support for spending plan. That's how the FT is reporting it. I think you make a great point about how it's the asset prices that increase before consumer prices. So and there's that lag there. So that suggests that central banks, if they're just focusing on consumer prices, they could be leaving monetary policy too loose for too long. Would that be a legitimate conclusion?
Yes.
Okay.
Because the feedback is slow and uncertain, they very often don't return to normal or don't return to a non-activist or passive policy for way too long.
Yeah.
And before I forget it, I know the expense of mailing my books over to Australia is really almost prohibitive, but your audience can just do a Google search of my name and the titles of the book in PDF
Yeah.
and get free electronic copies of the Skyscraper Curse and my translation of Cantion's essay.
Great. I'll put some links in the show notes, Mark. That's terrific that
I
they're
appreciate that.
publicly available. That's excellent. Just before we go, can I ask, are you tracking this at the moment? Are there any? I mean, I'm unaware of what the what's going to be the next world's tallest building, but are you tracking that at the moment and what may be coming up and what we could be seeing?
Well, I can tell you that there's a lot of big buildings, super skyscrapers being built, being planned, and then of course there's a lot of them that are just for fun in the terms of the planning stage. There was a world record-setting skyscraper started in Saudi Arabia, the Jeddah Tower or the Kingdom Tower, and that was put on hold a few years ago. So that project stopped. But some of the current projects could be reworked into record-setting skyscrapers. But my main focus right now has been on commodity prices because I think commodity prices have risen, grains and metals and coal. I mean,
Yeah.
you guys have got the coal for Asia, and it's up from like I don't know what it's set in, but it's gone from like 100 to 200. So
Yeah.
that's great. We've in the United States, our total production of coal has already been sold for 2022. So I'm looking at commodity prices, but higher commodity prices is what undermines financial plans. So when I'm an entrepreneur and I set out an industrial plan or a financial plan for some business, I estimate costs and I estimate revenues. And the skyscraper curse comes about when costs are greater than anticipated and sales and revenues are less than anticipated. And that squeezes all the financial performance of companies. And that's what sends stocks into a tailspin. So that's what I'm looking at right now is commodity prices and stocks, in terms of their estimates or their projections for revenues. So I want to keep my eye on those things rather than looking way up in the sky uh, for the skyscrapers. But yeah, that's all part of it. But now we're more concerned with the nuts and bolts of all that.
Right. Okay. Well, I have to. I might have to check in with you after you've, if you're going to publish something on commodity prices. That's something I'd be very interested in because so where I am here in Australia, well, in Queensland, we're a major exporter of coal, and for the last decade or so, there have been some commentators that are saying, "Oh, coal's on the way out, and global demand is falling, and uh, we've got to get out of coal." And then suddenly we have this boom in coal prices. And I mean, it's just gone absolutely crazy. I mean, the coking coal price at times has got into the 300 to 400 US a ton range. Just absolutely extraordinary. And that's going to be a huge benefit for both the industry and for the state government here, which collects royalties from the coal. So we'll all benefit in a way. Okay.
Yeah.
Okay. Any final thoughts, Mark, before we close?
Well, I do want to encourage your audience to visit us at the Ludwig von Mises Institute, and that's mises.org. We're the largest economic webpage in the world, and all of our materials even our academic materials are accessible for the general population. And even if you're not interested in the economy, I mean, we've got daily articles on things that matter to people, whether that's skateboarding or stock prices. We're covering all of that stuff from the perspective of the Austrian school. And we also branch out a little bit into libertarian political theory as well. So it's a fresh, different perspective that you won't see in the mainstream press. And I appreciate this opportunity to be on your podcast for sure, and to get to this audience. But and there's no fees or registration. We're open 24/7, 365, and like I said, it's accessible, and it hits at all different levels of interest. And so I think that you'll find it, a great addition to what people read on a daily or weekly basis. So you're very much welcome to come and visit us.
Oh, thank you. Yes, absolutely. And I know Darren has published on the site before, and I look at it from time to time for sure. And there are lots of great resources there. You mentioned it's the largest. Did you say largest web page in the world? Do you mean economic web page, or do you?
Yes, largest economic web page, because we have all of our books, all of our journals. We've got defunct libertarian journals that we carry, and everything in the Austrian school practically, including our academic journals, going back forever. And we have all of the classics of Austrian economics and libertarianism, and you can see them, which is great, online. All of the books that we actually publish are in that PDF form, so you can see what you're getting into, whether it's a 50-page or a 500-page, or whether it's on, the money supply or methodology. You can see all that before you dive into the book or the article, or if you want to buy it. We sell everything at a discount. a student price for everyone, basically, because we were, outside the mainstream, and we're trying to get as many people uh, exposed to the Austrian school because of that, because of being locked out of the mainstream. And so I think that, people in Australia are probably already primed for this type of experience, that Australia and people around the world have been in a state of flux. And I'm not going to get into the details there, but I can tell that Australians and of course Americans too are not getting the answers or the information that they need, and they need to be checking in on your podcast on a regular basis to get a different sort of information.
Yeah. Yeah, I think what you're alluding to is the issues we've had here around the COVID response, and I mean, huge concerns about infringements of civil liberties, and yeah, I mean, just some things that when you look at them objectively seem over the top and a little crazy. So yeah, absolutely. I've tried to cover that as best I can on the podcast and different episodes. The issue is that we do have, I mean, for some, we've had a lot of fear in the community about the disease, and look, some of that may be warranted because it is a serious disease. But yeah, the reaction, I think we'll look back on it in a few years and we'll be horrified with some of the things we've done. It really has been extraordinary. So yeah, thanks for. I think that's what you're alluding to, Mark.
Yes.
Yeah, very good. Okay.
It's been fun watching some of that on the internet, actually.
Yeah. I mean, what I find extraordinary is when I watch the clips from the States and or from England, and they're commenting on what they're seeing over here, and I just have to say, yeah, that's pretty much what's going on. There are some people over here who are shocked by it. I mean, there are the people who are out demonstrating, but the majority is still probably supportive of many of those policies, or it doesn't affect them personally, so they're not that bothered by it. They're just apathetic about it. Maybe that's a better description. I really don't know. But anyhow, hopefully next year will be better. Mark Thornton, Senior Fellow at the Mises Institute, thanks so much for your time today, and I really appreciated you taking us through the Skyscraper Index.
Gene, I enjoyed this thoroughly, and I hope to do it again sometime.
Very good. Okay. Thanks, Mark.